Welcome to the Academy of Ideas Economy Forum. I'm Rob Lyons. As well as being the Science and Technology Director at the Academy of Ideas, I'm also the convener of the Economy Forum. The war in Ukraine has been like an earthquake under international relations. Russia has become a pariah facing heavy economic sanctions, while European countries in particular scramble around to find alternative sources of energy, fertilizer, and much more. China and India could play important roles in providing an alternative outlet for Russian oil and gas, perhaps even for payments as well. But even before the current conflict, the COVID pandemic had sparked a discussion about the West's over-reliance on Chinese manufacturing and the need to be more self-reliant. Indeed, the assumption that the world market will provide has been increasingly questioned as countries have become more protectionist. So tonight we'll discuss these more long-standing issues and how things may play out in the future. Now, before I introduce our speaker, I just wanted to say that the Academy of Ideas has been determined throughout the past couple of years, while physical life has often been locked down, that intellectual life must not be locked down. While the COVID restrictions have largely gone, we're taking advantage of Zoom to run free online events as well as in-person events. While we don't charge for these events, they still involve time and effort to bring together. So if you'd like to chip in with the price of a pint, or even a large round to support our work, please visit academyofideas.org.uk/support, and the link is in the chat. Thanks to my colleague Alistair Donalds. Thank you very much, Alistair. Right, I'm delighted that our speaker tonight is Phil Mullen. He's a leading light in the Economy Forum. Phil is a writer, lecturer, and business manager, and the author of 3 books. Most pertinently for tonight's discussion, his latest book, Beyond Confrontation, Globalists, Nationalists, and Their Discontents, addresses the crumbling of the post-1945 world order and the intensification of international rivalries. Excuse me. So Phil's going to speak for about 25 minutes or so, and then the floor will be open to questions and comments. So over to you, Phil.
Great, thank you very much. Thank you very much, Rob. Although today it seems, thankfully, the Ukrainians have the upper hand in the war at the moment, the winner of the military conflict does, of course, remain unclear. However, I think there's already one winner from this war, and that's the idea of a reversal or the death of globalization, which is a theme propping up everywhere in the economic coverage of the past few weeks. For instance, Larry Fink, who's the boss of the world's largest asset manager, BlackRock, he covered this in his annual letter to shareholders, which you may know is a letter which has become a must-read for gauging where and what American financial business leaders are thinking about. And in the letter, Fink declared a couple of weeks ago that Russia's invasion, quote, has put an end to the globalization we've experienced for the last 3 decades. Now, before I get into the specifics of the economic repercussions of today's geopolitical changes, I reject this prism of globalization and deglobalization to summarize what's been happening and what might be changing. Quite simply, world economic developments do not follow the sort of dichotomy described by Fink of having had 3 decades of globalization, and now that's over, or at least is on the way out. This either or, more or less, counterposition of globalization to deglobalization is too shallow, I think, to provide clarity. And this underlies the point made on the blurb for this evening's forum, which is that globalization has had obituaries published many times before. They were out after the financial crash of 2008, after the Brexit vote in 2016, and then the election of Trump. And of course, we had more obituaries following the pandemic lockdowns and the accompanying disruption of global supply chains. But when something is declared dead and then seemingly survives so that it can be declared dead again a couple of years later, and this recurs even a couple more times, it should, I think, ring a bell about how useful is this concept. Rather, I'd argue that quite specific economic trends and what they mean get lost when portrayed as if they're part of an ingrained, almost natural cycle or wave of capitalism. So nowadays, the period leading up to the First World War is often called the first wave of globalization, while the current era that is generally thought to have started, as Fink writes, 30 years ago at the end of the Cold War, this becomes globalization 2.0. And the conventional view is that at some point, the wave turns into its opposite. It's shocked into reverse by some crisis, a financial crash, a pandemic, or as in 1914, and again today, by a war. And I think this binary perspective of intrinsic cycles or waves suddenly becoming inverted can certainly provide catchy headlines. You know, it's the headline of our forum, really, but it falls down because capitalism always operates both nationally and internationally at the same time. And as a result of this, economic internationalization, often equated with globalization, coexists with national economic developments, usually associated with the opposite, deglobalization. So putting aside the oversimplifications of the death of globalization perspective, I think a better starting point for us is that the world economy is always in flux. The balance between the international and the national is always changing. And so the pertinent questions for today become what features or changes are likely to be magnified or sped up by the war and why. Now, I think the most important impact, and this is what I'm going to dwell on and expand in different ways, I think the most important impact is going to be the acceleration of the existing fragmentation within the world economy, both at a regional level and also at the national level. Now, the regionalization of trade and production will, I think, continue into those three main economic groupings. So we're familiar with an American-led bloc, a China-led Asia, with Europe as the third region. But alongside this regionalization, and especially within the American and the European regions, countries will also turn further inward, as Rob mentioned in his introduction, with more national state intervention and more protectionist measures. Hence, we've seen the many calls made in recent years for localizing production and the reshoring of what had previously been offshored, sometimes mostly to Asia on the other side of the world. Now, I stress that this is an acceleration of a trend. It's not something new that's happened because of the pandemic or because of the Ukrainian war, because fragmentation has been happening for a long time, becoming more pronounced, especially I'd argue since the financial crisis. These splintering trends have now established some momentum, and before today's conflict were given greater impetus, of course, by the experience of the COVID-19 lockdowns with all those disrupted international economic connections, which made it seem both to politicians and to business leaders as it was simply good practical sense to look inwards, or at least much closer to home, for producing things like medical equipment or things not so much connected with the pandemic, things like semiconductors. Now, looking at how these parallel trends towards national autarky on one hand and towards regionalization on the other, how those trends evolve, my argument is that although they both have material or economic drivers, as well also as geopolitical ones, and although the two, the economic and the geopolitical, are entangled, I think it's the geopolitical ones that become more significant in speeding up change, as is happening today. Now, to look at these two sides, to briefly summarize, the material side is quite straightforward, and we've discussed it before in previous forums. It's rooted primarily in domestic economic problems afflicting the advanced industrialized countries. Over the past half century, their protracted decay in productive activity and in the slowing pace of productivity growth has underpinned both the internationalizing and the nationalizing features of recent decades, each of these expressing one of the two main ways of coping with businesses' profitability problems. On the nationalizing side, we see a greater business reliance on the support of their nation states, and on the internationalizing side, these homegrown businesses look to compensate by extending their activities abroad. Sometimes this is through cross-border trading relationships, conventionally increasing sales to cut unit costs through exporting, or reducing production costs at home with cheaper imported supplies. But increasingly, it takes the form of investing and producing abroad. I stress again, these two sides are not opposites. Indeed, the very process of economic internationalization is accompanied by increased national state intervention, because all the mature national economies have been experiencing, though unevenly, but they've all been experiencing economic slowdowns over recent decades, and they're all therefore simultaneously being driven to operate abroad, leading to intensified competition on the world market. And this brings conflict, not just between businesses, such as say between Boeing and Airbus in the airline industry, but also between their respective governments, between the American and the various European governments. In economic terms, then, regionalization can be understood a little crudely, but as a sort of compromise, a way of trying to combine the benefits of both internationalization and national control. Regionalization retains some of the cost efficiencies of a wider division of labor and of greater specialization than is possible within one single national economy, while it also enables more government clout than is possible at the global level. This operates mostly for the governments of the dominant country or countries within a region, implying control for Washington and for Beijing in their respective regions, and in Europe to some extent for Paris and increasingly now for Berlin. Now, mentioning Berlin moves us from the material economic drivers of fragmentation to the geopolitical ones. And this is where today's conflict, I think, marks a step change, expressed in Olaf Scholz's government's watershed moment, as it's been described, and the pledges for Germany to become a more substantial military and foreign policy power again. Now, this sort of shift, or the shift that's illustrated in German politics, highlights that while economic unevenness between countries and between different parts of the world provides the material component for the unraveling of the post-war order, what happens in international politics and geopolitics is what leads to spurts of change. In a sense, economics matter for disrupting previous international arrangements, but politics matters more. Big geopolitical shocks like today's can be pivotal, not as killers of globalization, but as a wake-up call to Western politicians about how tenuous their old order already was. For Western leaders, geopolitical bombshells can bring existing trends and changes to the surface and force them into their consideration. One consequence is that protectionist measures that were previously widely decried as being extreme or associated with isolationists like Trump, these now become acceptable and in a sense normalized. I've already commented, we know that the pandemic experiences have already concentrated minds on economic resilience, as it's called, and self-sufficiency, and they already started to legitimate protectionism and autarky. And this war is reinforcing those existing inducements towards economic self-reliance, having highlighted other external dependencies of Western industrialized countries, as Rob mentioned, not just supplies of fossil fuels, but various vital metals, as well as foodstuffs, though the latter, as we know, is going to be a much bigger blow to poorer countries than it is going to be to Europe or America. Now, all these sort of supply blockages, which are consequent upon the war and the sanctions, are genuine material issues for many Western businesses. And of course, they exacerbate the cost of living squeeze, which is going to be worsening. But I'd argue that within politics, nothing, not even a pandemic or climate change, is as powerful as a stimulus for change as matters of wartime national security. Security concerns sort of focus the political minds in a way that nothing else does, something the Australian Prime Minister Scott Morrison captured recently when he remarked how, quote, "The events unfolding in Europe are a reminder of the close relationship between energy security, economic security, and national security." In summary on this part then, on top of the protectionist state actions taken for domestic economic reasons by different nation states, it is geopolitical considerations, first through the pandemic and then by today's military and economic warfare, that have made clearer to Western governments the urgency of building economic self-reliance, thereby reinforcing those existing autarkic tendencies. I'll end with 3 illustrations of how politics, geopolitics, economics are already interacting to encourage fragmentation, and how the Russian invasion could make them even more overt. One illustration is about government and business interactions. One is about regionalization, and one is about international reserves, currency reserves. First, on cross-border, the way that cross-border competition and rivalry have been helping to tighten relationships between businesses and governments. Even the most international of businesses like Facebook, Apple, Renault, Volkswagen, they all have a national dimension, which is institutionalized in their intrinsic connection to their own nation state. Another expression of that national and international symbiosis I've introduced earlier. As we've noted, this manifests itself in governments facilitating those protectionist trends of the past couple of decades, which have contributed to all those state-orchestrated tensions over trade, rules, regulations, and so on, that we've seen breaking out between regions and between countries. Now, I think the war will likely add to the closer integration of the public and private, of government and business, which in turn can ratchet up, and is likely to ratchet up, the inter-nation temperature. This is another reason why we should not expect the recent appearance of Western unity against Russia to survive for that long. Indeed, different approaches over sanctions, over boycotting energy, what to do about Putin are already in the open. And adding extra unpredictability to the mix of what is coming up, there is still a conspicuous divergence between economic and military warfare, demonstrated by Europe's reliance on Russian energy and its reluctance so far to ban imports, while it's simultaneously sending lethal weaponry to be used against Russian forces. A bit of a mismatch, which is a tension which is being, I think, worked through every day at the moment. A second illustration of the politics-economics fusion is that superimposed on the trend I described and remind us of towards economic regionalization is the geopolitical bifurcation between the United States and China. Because I think whatever transpires in the coming months between the West and Russia, the geopolitical shakeup prompted by this war will focus again on the split between America and China. Not only because China is, of course, much bigger than Russia, but also far more interconnected economically and financially with the rest of the world. The primary geopolitical antagonism, even if there's a new Cold War in Europe, will continue to be that in the future between Washington and Beijing. And today's showdown with Moscow is already being discussed in some American circles as a dress rehearsal for the bigger one to come. An extra feature here is to recognize that many Asian countries, while economically integrated with China, will try to retain what they call a strategic ambiguity between the United States and China, try and, as some call it, keep a foot in both camps. So the idea of a consolidated Chinese geopolitical bloc is not anytime close, I don't think. Adam Tooze, the economic historian, I think is right to talk about when he's talk about what he called the formation of polarities rather than the formation of blocs. Now, this overarching US-China confrontation also means that the position of Europe within the global order, I think, depends more on geopolitics than it does on the economics of European-Chinese trade, business relationships. In the short and medium terms, European leaders could conclude that for all of Emmanuel Macron's talk of building European strategic autonomy, the member states are too divided to be able to overcome their collective dependence on the US, not least for their defense and national security. They could therefore continue to throw in their lot with Washington as a junior security partner. Or the European leaders could decide that given all the transatlantic tensions in recent years, they'd be foolish, and I wouldn't, by the way, stress, I wouldn't limit those to Trump. They were there under Obama, they're there under Biden, that because of all those tensions, the Europeans would be foolish to rely on America forever in today's very uncertain geopolitical circumstances. And instead, they could opt to do their best to develop more independence as a third geopolitical region between the American and Chinese-led ones. A third illustration of the political economic interactions driving fragmentation, and my final main point, is the potential, excuse me, is the potential that today's geopolitical crisis could advance a shift in the international order through undermining the global role of America's national currency. Now, possessing the top global currency is one of the greatest assets a hegemon can have, allowing it to camouflage economic decline and to sustain its geopolitical power. What is often called this exorbitant privilege gives America enormous borrowing and buying capacity and enables it to fund America's accumulated external debts and its ongoing current account and budget deficits. Now, based on the only precedent, that is Britain's replacement as hegemon by the United States, possessing the world currency is one of the assets that the declining world power is slowest to lose. We can recall that the pound sterling remained a significant global currency until its unambiguous replacement by the dollar during the Second World War. But that this was at least half a century after Britain had already been overtaken on a range of economic criteria by both America and Germany. Now, this staying power of a global currency derives partly from the network effect that because so many countries and businesses are using the dollar for cross-border activities, it becomes enmeshed within international economic operations and is hard to replace. For instance, simple terms, dollar assets are attractive precisely because they are so easy for a country to sell. Unless, of course, you're Russia today and you're banned from doing so. In addition, the US Federal Reserve is seen by other governments as playing a crucial role during times of severe financial instability by providing what are called emergency swap lines to other central banks, as it did during the financial crisis and again in the early months of the pandemic. Now, for these and many more reasons, the dollar has what's called incumbency inertia, illustrated in how it still makes up about 60% of central bank currency reserves, about the same as it was in the late 1970s, even though the US economy now accounts for only about 1/5, 20% of global output. The dollar as a currency therefore plays a disproportionate role as world money relative to the size of the American economy. However, measures being taken by the US government to weaponize the dollar in an attempt to bolster its fading authority, and these didn't start with the events of the last few weeks. These attempts to bolster America's fading authority are starting to backfire, and this hegemonic asset could switch to being a source of geopolitical instability. The effective measures taken at the instigation of Washington 4 weeks ago to clamp down on Russia's use of its central bank reserves, in particular those held in dollars and in other Western countries' currencies, as well as limiting Russia's access to dollar-based payments and financial institutions. All these steps taken by the United States or led by the United States adds motivation for other nations to themselves de-dollarize by reducing their holdings of dollar assets and their dependence on dollar-based financial systems. Now, China, you're probably aware, has already been developing alternatives to alternative non-dollar financial structures in the same way that it's been building up other international institutions parallel to US-dominated ones. For example, I've discussed in my book the role of the Asian Infrastructure Investment Bank as a sort of China-led alternative alongside the World Bank. But after what's happened to Russia, other countries, including supposed allies of America, will have greater reason to diversify away from the dollar and to cooperate with China in its parallel financial structures. Not just Russia, but countries like Indonesia have already been conducting a substantial part of their bilateral trade with China in renminbi. And Saudi Arabia, you may be aware, is in talks at the moment with China about selling it oil in yuan, rather than in dollars, which would mark a significant geopolitical shift. We should note too the efforts of the Chinese state to move faster in creating a credible central bank digital currency ahead of everyone else. This would both make China less susceptible to American financial sanctions, and a digital yuan also offers other traders an easy way to reroute transactions and bypass the dollar-based system. And as the recognized global first mover in this area, China is itself helping the Bank for International Settlements to establish rules for the interoperability of multiple central bank digital currencies, which would further undercut the dollar's use for payments between other pairs of countries. You may have read just in the last few weeks how one influential currency expert is arguing that the war might even speed up the diversification of reserves, not just into non-dollar currencies, but into hard commodities like gold. It was Zoltan Pozsar, formerly at the IMF, former senior advisor to the US government, now at Credit Suisse Bank. He made the bold forecast that the impact of the war could accelerate the global monetary system, shifting from one backed by government bonds to one that is backed by commodities, comparing this crisis to the collapse of Bretton Woods era in 1971, when President Nixon took the dollar off gold. Pozsar has speculated that China could sell some of their US Treasury bonds in order to lease ships and buy up cheap Russian commodities. And he anticipates that when this war and crisis is over, as a result, the dollar could be much weaker. And on the flip side, the renminbi much stronger, being backed by a basket of commodities. Now, my less dramatic view is that I think the imminent demise of the dollar as world money remains unlikely over the next few years. But I think we should recall Ernest Hemingway's wise words about bankruptcy. How did you go bankrupt? One of his characters is asked. 2 ways, was the reply. Gradually, then suddenly. A continued gradual shift to a post-dollar financial world might also turn sudden in the same way, which I think would practically and symbolically be a tremendous blow to the already much weakened American authority around the world. So to conclude, this scenario about currencies sees actions taken for geopolitical reasons, namely the financial sanctions on Russia, rebounding upon economics, namely undermining the global role of the dollar, which, while not the cause of Washington's declining authority, does reflect and could then reinforce its diminution, and therefore could bring forward that disorderly fracturing of the world around 2 parallel monetary, economic, as well as geopolitical blocks. Thanks.
Brilliant. Thank you very much, Phil. That was most excellent. I'll just take you off spotlight. Right. Okay. So the floor is yours. There's an awful lot in what Phil says. I'll give him a break from talking for a few minutes. If you'd like to contribute, if you go to the bottom of your screen, you'll see reactions, and then put myself on spotlight. You'll see reactions, and then you'll see raise hand. Sometimes it's still under the participants button, and then there's a little grey box that says raised hand. So if you've got any questions or any comments, please feel free to raise your hand and let me know you'd like to speak. And feel absolutely free about asking basic questions. I've actually got a couple of basic questions I might ask Phil, but let's go over to you first. So I'll take myself off spotlight, and then Josephine Hussey, the floor is yours.
Thank you. Mine is a very basic question, I think. I just wondered whether, because of Brexit, at one level, Britain is ahead of the game in terms of, does it put Britain in a better position? Because we've already kind of moved away towards a much more nation-based support system, business-wise. But then how does that work at an international level in terms of Britain's or UK's involvement in NATO? And obviously, as you said, that security concerns focus political minds more than anything else.
Great. Thank you very much, Josephine. Giovanni.
Hi. Thank you so much for that presentation. Quickly, Phil, I would say, don't you think that we are in a stage in globalization that we are just too far into it, that most of the economies worldwide rely so much into the production of economic gains that they're doing outside of their borders, that now retreating and coming back internally and focusing on their own production and trying to sell to their own people as much as they were doing outside? Don't you think that is counteractive and is just gonna result in massive economic collapses?
Okay, thank you very much, Giovanni. Robert Figg.
Hi, thanks. Yeah, one of the things that I've noticed about this recent turmoil in the commodity markets has been that China has fared no better than anybody else as a consumer of commodities. It has been hit incredibly badly by erratic and volatile markets. In particular, we are looking at the commodities that are produced in Russia and Ukraine, being natural gas, oil, wheat, nickel, and copper. All of those have been through some of the most volatile times ever, and China has, as a consumer of those metals, has suffered quite badly as well. And I think that any attempt by them at the moment to try and change the terms, move away from the dollar-based commodity economy to one which is based on the renminbi would not be received particularly well in the world economy, because China is still seen as, first of all, its currency is not freely tradable, and second of all, it is extremely erratic in terms of its policy making. And I think people would look to, at the moment, certainly offshore their Chinese investments, mainly to Singapore, now that Hong Kong is no longer seen as a viable alternative. So I'm not entirely sure that I'm sure that China will play in an attempt to gain control over some of these markets through the use of renminbi, but I think they're going to find it extremely difficult.
Okay, thanks very much indeed. Now, Donald Clark had made an interesting point in the chat. I wonder if I could encourage him to speak up. Robert, sorry, Donald, are you there?
Can you hear me?
Yeah.
Yeah, I'd like to ask about something that wasn't mentioned in the analysis, and that's climate change, really, because that transcends all the arguments for me, in that it will put a brake on globalization. It will become what was called a globalization bombshell, bigger than any of these episodic wars. And yet, the contradiction is that we need globalization to solve the problem. And there's the rub.
Okay, great. Thanks very much, Donald. Alex Cameron. Alex, are you there? Oh, sorry, I have to ask you to unmute it, do I? He's wandered off. Oh, there we go. I can't hear you, Alex.
Can you hear me now?
I can, yes. Thank you very much.
Right, apologies for this. Sorry, it's either Spain or my laptop. Another basic question. Phil, you said many years ago, and it's taken this long for it to kind of sink in, if indeed it has, this idea that geopolitics and national interest is no contradiction. And I think sometimes, for me, it feels like sometimes we skate over this a wee bit and don't quite get the importance of that insight of yours. And how I understand that is, tonight you've kind of talked about, you see a trend towards regionalization. In the past, we've talked about how the UK breaking for Europe is destabilizing. Riffing off what Josephine said a wee minute ago, does it not put Britain in a better situation, or does it not demarcate Britain for the rest of Europe? And I kind of just logically, I'm not sure that it does. We might be witnessing a real tremor at the moment in terms of geopolitics, but still, I don't see the contradiction. Is it not just a moment, Phil?
Right, okay, just a moment. Tony Pierce.
Is that better?
That's better. Sorry, I needed to. So Zoom is very funny. Sometimes you need to unmute people, sometimes you don't. Anyway, hello.
Yeah, no. All right, okay, hello there. Yeah, another great introduction. I've got a sort of question around national governments and corporations and international and their relationship, and I suppose in a way also related to that is international institutions. So while Phil quite rightly says there's a flow of capital, flow of corporations back to their sort of homeland governments, is it always clear where those home interests lie? So, for example, Shell had to make a choice between it's a Dutch-British company, but it seems to have located its headquarters, or will be locating its headquarters in London, much to the joy of the city. But how do those relationships start to rebuild after so many companies? I can think of one like Ideal, which was sort of leading sanitary ware company that was British, went to Bulgaria. It's still Bulgarian, but financed completely by Chinese money. Now, I don't know where its home is. I don't know whether it knows where it is. But these big corporations, will they try? They'll presumably try and play governments off against each other, as well as develop relationships with the home country. So that's the first question. And the second is, how does that relate to international institutions, when it seems to me some of the really big corporations, American financial and high-tech corporations, seem to be stepping in where global institutions used to go? And is that a process that will continue and strengthen over time?
Great. Okay. Thank you very much, Tony. I'm going to bring Phil back in, so I'll have to beg the patience of various other people. But I've got a couple of questions as well. One is a basic one, which is about digital central bank currencies, because I want somebody to explain that to me, whether it's Phil or somebody else. Because what's the difference between that and just digital currencies or digital payments or whatever? Why does the idea of a digital currency matter so much? And secondly, just your thoughts on, Phil, on Germany, because I remember 30 years ago, at the time of the war in former Yugoslavia, there was a lot of talk about this was Germany's moment where it's going to kind of re-emerge on the world stage. And in the sense of obviously being the most important player within the EU, it did. But at the same time, in terms of this, a broader political or even military role, actually hasn't really happened to the extent that perhaps seemed in the offing back then. So is this one of these things where it could get kicked into the long grass yet again if once this crisis is over? So just your thoughts on that, really. Right.
Well, I suppose it's a bit of an answer to Alex's question in terms of setting the framework. Is that could this just be a moment, by which I thought you meant, Alex, this will just pass and we'll back to where we were, pre early January or whatever. Well, obviously anything is possible in terms of the unpredictability of things, but what I'm arguing is that something like what Rob just reminded us of in terms of the long time it's taken for Germany to go from reunification and becoming clearly the strongest economic power within Europe to it then flexing a bit more of an international geopolitical role. It's taken an awful long time to do that. And I think that's indicative that I think this perspective, which is associated with the perspective of globalization, but is also a general perspective of the idea of post-Cold War stability, that things were really the best of all possible worlds for the West. You had the a moral triumph against the evil Soviet Union. You had relative economic stability. You had apparently, the vanquishing of inflation. You had apparently we'd achieved an ability with central banks to be able to have this sort of great moderation period, as it was described, and that was seen to be happening within the economic and the geopolitical sphere, that everything was relatively stable. Clearly, Yugoslavia was a bit of a interruption to that, but that managed to be overtaken or overcome. But I think what this has done, as I say, what geopolitical flashpoints like this, what geopolitical earthquakes like this do, it does have that potential for an awakening. And I think what happened in the German parliament and what happened with the new government there is indicative of that. Whether it would happen with Angela Merkel has still been there or not, counterfactual, don't know. But I think it's indicative of that sort of big jump that can take place whenever politics seems to change. And therefore, that's my perspective of this, that this is one of those, just as Olaf Scholz told about it, a turning point in German politics, but also I think a turning point in world politics, that the belief that everything was really stable under this unipolar world where America was in control, and okay, it's declining a bit over there, and it made a few faux pas by electing Trump and then, a rather over hasty departure from Afghanistan. But I think when you have a war happening on the ground in this way, and it's clear that there is and it creates that sense of unpredictability, then it opens up these other possibilities. Now, today we're supposed to be discussing what the economic implications are, and I'll continue to focus on that. But the point I'm making is that a geopolitical rupture, I think, poses those historic tensions more vividly. And those tensions, to relate to some of the questions, are tensions, yes, which exist between nationalism and internationalism, between economics and politics, and that there's no easy resolution to those, that they are, generally problematic. I mean, Giovanni made the point that, couldn't we say we've gone too far down the road of globalization, that there's just too much interconnection at the moment to be able to, for that either to reverse or for that not to be very, very problematic if either countries or companies attempt to go back to their national base alone, if they really try to put into practice their sense of self-reliance and economic autarky. And I think Giovanni's right. It is a big problem for them. There was an article, I don't know if you picked up, anyone at the weekend in the Financial Times, looking at something, not linked to the war, the bicycle industry, where, there's a lot of calls for reshoring the bicycle industry, even though it's not seen as a strategic good these days. But the Financial Times is highlighting just how difficult that is, given the complexities. We're not talking about Apple and 300 suppliers, but the complexities of a bicycle and the global supply chains that have been developed over the period, and all of the logistics involved and so on, that's not something that can just be replaced by saying, well, let's set up a couple of local suppliers here, one that does wheels and one that does the forks and one that does the frame. somebody has to agree to do that, but also it takes time to be able to create anything like the levels of efficiency which there are elsewhere. So that tension between, wanting to have, and politicians will express this as well, wanting to have, provide jobs at home, and we've seen this for a long time, particularly in America, jobs for Americans, but we've seen it in other countries too. As opposed to, well, okay, you can set up say a domestically based bicycle industry, but are you going to be able to sell any of those high cost bicycles to anyone else in the world? So there's a playoff between a competitiveness and creating a few jobs at home. So that is very problematic, and generally stuff I've written before saying that I'm very dubious that reshoring can take off because of that. But it is that tension between the two which I think is what we got to look out for and explore. Let me just a point about the currency thing, just to clarify the currency markets. I'm not anticipating, I wasn't trying to describe a scenario where the renminbi would take over from the dollar. I think that's very, very unlikely for the reasons that Rob and others give. The renminbi is not convertible. What is more likely, and this is interestingly, if you want to pursue the discussion about the currency markets, Barry Eichengreen is probably the world expert on it. Eichengreen, his name is Barry Eichengreen. He wrote a book, I think probably about 10 years ago, on the exorbitant privilege, which discusses a lot of this. But he's still writing this, and he charts what is more likely, he thinks, and he talks about a stealthy erosion of the dollar, because he points out that while I said the dollar's role in international currencies has stayed pretty much the same as it was since the 70s at 60%, it has gone up and down since then. And Barry Eichengreen concentrates on where it was 20 years ago, when the dollar was at 70% of international currencies. So he says, well, like, if you look at that last 20 years, there's been a 10% decline. Okay, gradual, but it's not something that's created a lot of a lot of controversy. And he points out that the renminbi has benefited only a little from that erosion of the dollar. It's been other sort of currencies like the Australian dollar, the Canadian dollar, the Swedish currency, the Swiss currency. It's been sort of, mid-level currencies have been benefiting. And he describes this as a movement more towards a multi-currency world rather than the replacement of the dollar by the renminbi. The point is that moving to just as in politics, I think we're moving to more openly a multipolar world around this belief that America could run the world in the way that it still thinks it can. We're moving more towards a multi-currency world. And that doesn't then solidify or confirm that China's taken over, because we're a long, long way for that. But what it does do is it undermines the ability of America to weaponize the dollar, because as if more and more, for example, the Saudi Arabian, I'll finish on this, the Saudi Arabian Chinese discussion about pricing Saudi Arabian oil not in dollars. Well, that creates a very different dynamic then in terms of the relationship of Saudi Arabia to the United States as well. The ability of the United States to leverage its currency authority, in a sense, becomes steadily eroded, and it's that sort of gradual process which I think could be accelerated, not to a culmination of something completely different in 6 months' time, but it's a trend which can be accelerated because of this greater openness which is thrown up by the repercussions of the Ukrainian war. I'll try and come back to some of the others later, but I've spoken enough at the moment.
Great. Okay, so I hope you can hear me. Ian Pegg.
Hi. Sorry, I can't do the video. Quite a very basic question. I'm glad Phil mentioned bicycles, though. There is, as in the difficulty of reshoring, and I think what's happening in Ukraine has given a boost to those who argue for bringing industry home, because it allows them to put it in the framework of security and resilience. But there are real difficulties with that in the way that Phil and others have suggested. And I also think the way to suggest the only way forward is to undermine the international
connection. All right, okay. I didn't catch a lot of that, I'm afraid, Ian. Maybe if you could stick some of that in the chat, because the connection wasn't great. Hilary Salt.
I guess I'm trying to navigate a way between two polar opposites in my head. One is that for China, which owns, it's over $1 trillion, isn't it, of US debt. So, you know, a lot of its assets are held in US dollars. So on that level, it feels really against its interests for China to threaten the dollar at all. But then a kind of polar opposite, if you just imagine China even just margin selling US debt, so, you know, big fall in not just US bonds but Western bonds, I guess, big rise in interest rates, which, you know, is accelerated still more by inflation, which puts a lot of Western companies under an awful lot of pressure because they're very highly leveraged. They've got loads of debt in them. And that kind of leads to a kind of collapse of Western industry, which kind of feels like that's in China's interest. So I was just trying to kind of navigate in my head, you know, where does that leave China in terms of its best card to play?
Okay, great, thank you. Peter.
Yes, it's interesting. Do you think there's much difference between manufacturing and intellectual? It's interesting. I was reading a book, you know, and the author's in one country, the sub-editor elsewhere is printed in the third thing. And it's interesting that for all we talk about manufacturing onshoring, certainly let's go the other way. There's also the issue of raw materials. Moving on to supply chains, certainly I think there's a general consensus that supply chains need to become more resilient, probably less reliance on just-in-time, more buffer stock. But could the solution to that be actually to have duplicate suppliers in different countries, which is still globalization, but just more resilient globalization? A couple of thoughts. One, I was thinking, is it feasible to sort of have strategic 3D printing plants? These things question about intellectual property, because who actually owns the things that are going to be done? And in fact, the whole issue about intellectual property and who's going to own the property. And the last one was regionalisation. I think of the UK. The idea of the UK leaving the EU was going to look abroad, which is fine. If you look at Asia, what worries me is how steady will Asia be? There are parts of Asia that are probably fine, other parts less so. This whole business, what really is going to happen with Asia? Because you've looked at China on the one hand and lots of other countries on the other hand. I'd be interested in your view on that.
Great, thank you very much, Peter. Daniel Benamy.
Okay, can you hear me?
Yep.
Great. I thought Phil's framework was extremely useful. I completely go along with it, but I think I'd be a bit more cautious on the German transition, the watershed or Zeitenwende, the kind of turning point in Germany and its significance, because I think we can only really say in retrospect whether it has or will be a big shift. I mean, I hesitate to say this because there are people on this call who know more about Germany than me, but it seems to me it's certainly right to say that it was very significant, because Olaf Scholz, the German Chancellor, had been seen as kind of quite weak towards Russia in relation to the Ukraine and towards Russia generally. And lots of people in his party, like the former German Chancellor, Gerhard Schröder, are very friendly with Russia. So it was significant that he stood up and said, we are having a turning point in German politics. But I think in retrospect, you've got to be a bit careful about saying how significant that is, because as people, including Phil and Rob, have already said, you saw tentative moves after the end of the Cold War for Germany to play more of a role, so in relation to recognizing Croatia as a separate state in the former Yugoslavia and sending German troops abroad, which was a taboo after the Second World War. But also in terms of what's going to happen, I mean, Scholz talked about bolstering Germany's military spending to over 2% of GDP and bolstering the army. But will he do that? I mean, maybe, it could be, and that would be significant, but pacifism is very entrenched in German politics, so he may find it difficult to do that in practice. I mean, that's speculation. One thing we know for certain that he hasn't done so far, and which would be very significant from an economic perspective, is to get rid of Germany's energy transition. So, you know, there's a very big emphasis in Germany's energy policy on having a kind of transition to green energy. And theoretically, you could have said, okay, well, now our priority is to make Germany more self-sufficient in energy and to not wind down nuclear power stations. That could be a real priority. But that didn't change. That stayed the same. So I'm not saying that this turning point won't be significant, but I think we can't really say for sure now whether it will be significant or how significant it will be. I think it will have some significance. And just one other very brief example along these lines, thinking about it in retrospect, it's interesting that the Clinton administration already in the 2 decades ago, almost, was talking about, sorry, the Obama administration was talking about a pivot to China. So in other words, it was already clear that China was becoming an economic competitor to the US. So in order to do that, America was talking about trying to contain China strategically. So Hillary Clinton and the Obama administration, they were talking about pivot to Asia. But then they got bogged down in wars in the Middle East, in Iraq and Afghanistan. Now they've got bogged down in a war in Europe with the Ukraine, at least, I mean, not directly involved, but in terms of being preoccupied with it. So that kind of imperative of the pivot to China, they're finding it very, very difficult to do, even though they talked about it almost 20 years ago now. So I think Phil's Hemingway quote about gradually and suddenly is very apt, that you do kind of see these gradual shifts and then things suddenly happen. But I think it's hard to be sure of their significance, except with the benefit of hindsight, which clearly we don't have yet in relation to the Ukraine conflict.
Great, thank you very much. Johnny.
Yeah, hi. Yeah, great introduction, Phil. And I think I actually agree with you, Daniel, as well. I was thinking about crisis theory. You know, the idea is that the shape that's always driven is like a slope, and you're in your go-kart and you're going down the slope and you see the cliff edge, and then you try and brake, and then you've left it too late and you crash over, you know, and then you dust yourself out. And as you're walking up, you realize you'd actually lost control way further up the slope. You were already too late before you even saw the cliff edge. And you can only do that in retrospect. And that's like crisis theory works, isn't it? That's a crisis model. And I think that's what we're talking about here, isn't it? Because you can pick up these little tags along the way, but sometimes it takes a sort of an external shock, like COVID has done to the retail sector. The retail sector was already dying or was going through a massive transition. But then COVID comes along and just forces that issue. Well, because you look back and you can see what was happening. Just another point, talking about one of the differences that we have these days. I was thinking about the Google versus Australia, not cricket. Because when Google when they got into a kerfuffle with the Australian government about paying royalties to local newspapers and for streaming news and stuff like that, Google's just threatened to pulled out of all those streams and, you know, destabilize a whole lot of people's economic models. Quite a minor incident in its own way, but once you looked at it and you thought about it, you thought, yeah, what happens if they had shut down Google Maps for Australia? You know, with these international companies, these multinational companies, own huge amounts of our infrastructure or control huge amounts of our infrastructure, which we couldn't easily replace. And you know, the Google Maps is as important to water delivery in the UK and probably in Australia as the water companies are, because that's how people get to the pumps and maintain them, and that's all our telemetry is done. I just wonder whether one of the sort of resonances from this is that we're going to start seeing people, when we say you know, drawing stuff back in, trying to recover some of those vulnerabilities that people have got to the power of these completely uncontrollable international multinational organizations.
Right, thanks very much, Johnny. Useful little thing going on in the chat. Ian's just been clarifying his comments earlier because we couldn't really hear them very well. about the difficulties of reshoring and the costs involved. And he ends with a very interesting question about there's nowhere a discussion of the possibility of a new viable world order. So that maybe that's something that Phil could come back to towards the end, whether there's what possibilities there are for that to happen. Now, James Woodhousen has been waving virtually at me, so without being able to put his hand up. So, James, the floor is yours. Yeah.
Good. Well, great performance by Phil. Just in your article, Phil, you distinguish between an earlier phase of financialization and debt with a later, more recent phase of state intervention. And I think you were referring to this when you talked, I think, about the fusion of state and capital, really, in the most recent years, and a more aggressive policy. Would it be an accurate summary of your thesis with that happening on the economic side, but understanding the supremacy of geopolitics, nevertheless, that, you know, national state intervention has a tendency to lead to geopolitical intervention and interventionist wars? It's only a formula. Intervention leads to intervention with different kinds in mind, but it kind of, or maybe it doesn't capture what you're trying to say. The second thing is, I do think Robert Figg and my own entirely amateur compared with Robert's interest in commodities, mining, lithium, cobalt, and all that sexy EV stuff. I do think we need more work on all of that question, and would be delighted to work with Robert on that. I just want to urge that commodities nowadays include Taiwanese chips, because if you can't get them, you can't have a car, and you can't in a hurry have an iPhone and stuff like that. Obviously there's a Foxconn dimension, but so commodities for me, including agriculture, not just minerals, although Russia is extraordinarily strong in all minerals. I can give you a table, all goes back to Mendeleev, I reckon. You know, commodities, we need a nice, sorry, Rob, you know, that we need a nice all-embracing definition, although we understand that chip production is not the same as food production or lithium production. Just while we're on chips, the thing that I think most went unnoticed was the, I think, continuing collapse of NVIDIA, the American chip company, and its attempt to take over ARM Holdings for 25 billion quid. That attempt was rejected by the British government or blocked on national security grounds. That's new in show business, I think. I mean, obviously there have been tiffs before, like with Suez and Westland and all of that stuff. But when you're talking chips, it rather underlines it, that if, you know, NVIDIA is not allowed to take over ARM by the British government on a kind of Committee for Foreign Investment in the United States, CFIUS kind of basis, that is a new stage in protectionism. Just an end note, Rob, or a coda. I always used to look at the Reassuring Institute in America for the reshoring numbers, which were always what the trade union movement would call derisory. And looking at the most recent thing, the website no longer carries the numbers quite that it did, but the projection for 2021 in America, the projection for 2021 was 138,000 jobs being reshored. Now, I'm with Phil. I do believe that the new tensions, you know, like to do with commodities, you'll have more mining in America. They're already talking about that, and Robert will help us on that. You will get some kind of acceleration of reshoring, but that would be from a very low base. You'd have to do 10 million a year, really, to jobs, or at least 1 million a year to make a difference. 138,000, even double or triple that, not going to do it.
Great, thanks very much, James. Right, I'm going to bring in Phil. Lots and lots on the table.
Yes.
Oh, I've lost you. Can anybody else hear Phil?
Sorry, can you hear me now?
Okay.
Yep.
Yes, good.
Sorry, beg your pardon. I think a good point to take up on is from Daniel's point, but it relates to what James just saying in terms of the relationship of politics and economics, because that's the thing I've been, playing around with, both originally in that Beyond Confrontation book, but in the years since, and also even more so over the last 4 weeks, because I think what I'm talking about is in terms of what are we calling watershed moments or whatever, doesn't reverse the whole nature of economics and sort of somehow puts back in the box the whole sort of internationalization trend that has happened, or miraculously creates material resources which don't exist. So to take Daniel's point, I'm equally dubious as he is as to whether the Schulz government's pledges to spend 2% will actually turn into 2%, in the next period. However, the very fact that you have, German politicians talking about we were naive to believe that interdependence would be a stabilizer, i.e., they're admitting that they were, captured by that old idea that economic independence leads to peace. Because we're so dependent on Russia, we thought that would be sufficient. We've now realized we were naive, is effectively what they're saying, and therefore we have to build up our independent military strength, and we'd like to be able to become more self-sufficient in energy over time, but obviously steady on, we can't do anything in the short term. But it's that sense of that perspective on things has changed, or the ideas have changed, is what I think is most important about this. How it actually works itself out in terms of how much Germany spends on new tanks and what form that takes and so on is by the nature of our uncertain period entirely unpredictable. But the fact that they are having that discussion is what I think is important. It changes things. That's a small example of a broader thing which James was talking about, which is in terms of protectionism. We should remember that not so long ago, protectionism was condemned as being, narrow, insular, isolationist mercantilism, taking us to the dark ages. How could anyone do that? Now, me and others have spent time pointing out, that actually protectionist measures, both tariffs and the, non-tariff barriers, have been on the increase, in particular since the financial crisis. We've described all that, but it was something which was, put under the carpet. People could read, just like I could read, global trade alert reports which say, protectionism is on the rise. There are all these export controls, all these subsidies taking place, and so on. Those things were there, but nobody wanted to talk about it. It was one of those sort of, non-talked about or invisible knowns, or whatever way of describing it. They knew it was happening, but nobody had to talk about it, because it was much better to have this view of the world that protectionism is bad, we're globalists and we're good and we're bringing peace to the world and everything's going to be hunky-dory. When you have now, with the combination of the pandemic legitimizing the calls for self-sufficiency, whether they actually turn into anything, whether there is a new semiconductor industry built up in Europe, or a new semiconductor industry manufacturing plants built in America, wherever, there'll probably be attempts to do so, as James said. But whether those get realized or not is less important, I think, than the fact that it is now normalized to talk in those ways. When you have, The Economist, which is The Economist magazine, long standing mouthpiece for the merits of globalization, saying basically, well, there are more important things than trade. We can't allow ourselves to be dependent on these autocrats, whether it's Putin or Xi. Therefore, it's quite legitimate to have a bit of a movement to autarky. When you have long-standing free traders saying, well, some things are more important because of the new geopolitical situation, then that marks this shift in outlook, which then can have repercussions, which I know more than anyone else here are able to determine what those unfolding steps will be. But what I'm stressing is that I think we're moved into a different stage of greater fluidity and unpredictability, and therefore we need to be more open to things which are changing. I mean, for example, I've changed my view of inflation as a result of what's happened, because I was of the view, as people might know if they've read any of my articles on it, that I was in this sort of the transition camp, or the transitional camp perspective of saying, right, inflation that we've seen last year was very much a supply side problem, predicated upon the pandemic, disrupting things. It was an exogenous shock to the system, all these logistic problems, all the closure of factories because of the lockdowns and so on. Then it was inevitable that there was going to be this dislocation to supplies, or rather that was an inevitable consequence of all that, and that sometime that would work itself out. I think now with the geopolitical juncture changing, then what's happening, what Rob and others were describing, what's happening in the commodity markets could well go on for a very long time. And that supply side shock, which of particularly foodstuffs and energy, which then feeds through to anything else, means that inflation could be with us for a very long time, and that's going to compound lots of problems domestically for the central banks, blah 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 blah. So the condition, the context has changed, I think, because of, and not just not just other people change what it is, we need to change it, but also the conditions have changed, which means approaching the same issues with a different perspective. I'll leave it there and think about all other things.
Great, thank you very much. Austin.
Hi, hopefully my signal holds out. Just very quickly, in terms of these kind of changing perspectives, changing conditions, obviously China's had this kind of autarkic mentality for the last 75 years about, after the Second World War, making sure that it had enough grain, enough stocks to be self-sufficient in case it was ever attacked or isolated, or it actually isolated itself, didn't it? So it was a self-protectionist measure. But I'm just interested in the shift in protectionism from, like you were talking about, in terms of like market controls and how tariffs and all the rest of it, into the more kind of suspicious globalization conversations with Huawei, where it's not so much that, this is a imposter external business going to infiltrate our market and take our jobs, etc. It was more, can we trust them not to steal our secrets and be spies in the camp? And I just wondered whether there was, like you say, seeing things differently in terms of war, in terms of how we now see competitors much more on a political rivalry rather than necessarily just on a purely economic market rivalry. Just if you got any comments on that, hopefully that made sense. But in terms of the way China's operating, 10, 12 years ago, I think the state-owned enterprises within China were around about 11 to 15% of the economy, of GDP, and now they're 40% and rising. And that kind of consolidation with the state actually, bringing the private sector, which has now been allowed to flourish, they're kind of capitalizing in both senses on that. So you have things like Alibaba, Jack Ma, who was, hidden away for 3 months, secreted away. They've taken $250 billion off his stocks, which they've just incorporated within the state. But whether you see that kind of state-owned enterprise as a sign of strength within China, or a sign of weakness within China, I'd be interested to kind of hear your views, because it kind of seems to be that idea about the autonomy of private sector companies to be able to to have a dynamic of their own, which could then lead to a globalization in the sense that we've always understood it, seems to be kind of falling by the wayside, and the Chinese state is now kind of maximalizing its control over all those systems. So do you see that as, because I do understand that China is biding its time, it's not ready to kind of take control over anything yet. It's not been on its radar for quite some time that it's going to be the world leader or take over a global economic dominance. But it's it's in there in part of its kind of agenda. But I just wonder whether you think this is being hastened, or whether you think that the China is still playing softly, and the state-owned enterprises is just part of its kind of developmental strategy. I hope my signal held out there. You're looking very painful, so maybe it didn't make sense, or maybe you missed some words. But anyway, there you go.
Okay. Well, that was fine. There's a bit of an interesting discussion going on over in the chat again. Penny Lewis has raised a point about zombie companies, which is something of something you've raised numerous times in the past, Phil. And what happens to them? I mean, is that going to does the state have the resources now to do the kind of support that's kept those companies going? And Hilary notes, with rising interest rates, maybe that's going to tip some of those companies over the edge. So what's the sort of national economic impact of the things that have been going on at the moment? I'm going to take James Woodhousen because he was angling to get in, and then Robert Figg. So James, you had one other point.
I'm sorry, Rob. Could you let Robert go first? Because I think he's going to be more germane. And then I'd prefer to follow him. Etiquette,
Okay, Robert.
I'm not too sure about being germane. I thought it was British, actually. One of the things I wanted to talk about was the role of the Chinese state in recent events, where it was seen to be protecting this private company called Qingshan, a stainless steel company who had caused the immense volatility in nickel, where the state intervened to say that they would back a privately owned company through using the strategic reserve stocks of the government. And we've also seen Biden do very much the same thing, releasing stocks from the strategic reserve of oil, which is something that hasn't happened for some considerable time. And I think that it does really, in many ways, represent a failure of political activity, in the sense that Biden failed in Saudi Arabia and elsewhere to get the release of oil, and China itself, as we've been talking about it, trying to sort of establish itself much more substantially as a currency and a market of note, really reacts quite accidentally to what is going on in the world market often, and it's really just a panic response to protect its own assets. And I do think, though, that there has been a significant relaxing of international tensions as a result of the duties that were imposed by Trump and others to protect the North American steel and aluminium industries. I think that those have been lifted in many ways. And so I think that what's happened in Ukraine has led to a much more dramatic change in the way things are done at the moment. And they do tend to be very reactive rather than policy-based.
Thanks. Right, James, and then Patrick, and then I'll come to Phil to round things off. So James Woodhousen.
Well, it's just a footnote, Rob, if you can hear me. Yeah. I omitted to mention nuclear. Now, on Thursday, the government's going to make not a white paper, but a big announcement on energy security. And wind and nuclear are obviously ideal for the sort of autarkic direction in which we are headed, to the extent that we are. What's interesting about that, just by the way, is that as early as 2013, the endlessly anagrammable Fatih Birol, who always makes a cameo at our discussions on energy, he was elected to the IEA, and that was apparently on quite a pro-nuclear ticket. After that, in 2013, the IAEA and even the IPCC, plus the EU, were all coming out in favor of nuclear much more than before, well before the Ukraine crisis. So again, you've got a Phil-style trend that was going on, which was totally exacerbated by what's happened. At the same time, it's worth noting that in COP26, nuclear was the spectre at the feast. Nobody was banging on about nuclear. But cumulatively beforehand, and partly because some American states, under the influence of Michael Schellenberger, have gone nuclear, that, this sort of protectionist dynamic is, I think, fairly well ensconced before and certainly after. Be interesting to see the balance Boris adopts between wind and nuclear. He's been vacillating on that. What a surprise!
Okay, thanks, James. Right, Patrick Schumacher.
Thanks, guys. So I just want to make a few comments on, picking up from Austin, where he sees the, let's say, the realm of the economy becoming ever more politicized, moralized, in context with China in particular. I think it's very important to note that, and it's quite risky and dangerous for the UK, for UK businesses, what's going on. So first of all, yes, in China, the state-owned companies gaining more ground. Most private big companies are getting more and more controlled by the Chinese government, and the relative strength and power of market force in China are being restrained. But I also want to talk about the overall feelings in the Chinese educated, let's say, straighter middle class, and the whole atmosphere is one where it's quite tricky, where they're very prone to watch out how Chinese are treated, prone to boycotting whole industries, whole companies. And so it's very risky for UK business who are very much becoming dependent on China. First of all, the way the UK is gung-ho about the anti-Russia, the sanctions, the war crimes and indicting Putin, and the new level of sanctions, I think, is very, very carefully observed in China. And there's a lot of companies who came out, demonstrably withdrawing from Russia. And I think that's very, very much noted. And I feel, I have some eavesdrop in some of the educated Chinese news groups and media. This is a kind of polarization. First of all, also remember that for the last 2 years, there wasn't a single white or European face inside China. So it becomes much more isolated, although a lot of business going on. With respect to our industry, more and more, there is degrees of protectionism with respect to international companies. There's mandates from the government, for instance, in the real estate sector, that all private companies have to make competitions and have equal numbers of local versus foreign firms coming in. That when a foreign firm picks up a job, it can only go up to 50% of the fees. So it's. But then again, I think what's very important to see the mood where the Chinese, internally, people who are studying abroad are becoming seen as traitors. There's a lot of attention to if Chinese students are abused. There's a totally heightened sensitivity. It's difficult for us to perceive this kind of level what the Chinese government has been able to foster, this level of nationalism and nationalist identification. I saw it the first time very viscerally in 2000 with the Olympic Games when there was boycotting. So these are also very risky and dangerous situations for a lot of UK business. So, and it's true, it gets highly politicized. And I just wanted to close with, the Western media, I think, is I'm really depressed and atrocious, one-sidedness, or let's say cheering on Ukraine, edging them on to not compromise anything, and there's no media outlet has any analysis of underlying causes, motives. It's just attributed to a crazy Putin, and the basic facts of NATO membership of Ukraine, the refusal to recognize Crimea, etc. Sensible steps which could be taken now. Nobody's discussing which what are the concessions which we essentially made? I should have discussed it at day 2 or 3. And instead, we are having enough sunk costs, and even literally saying, how can the Ukrainian now make any concessions after all the suffering? So they're just pushed into an impossible situation, pushing on, and I think it's absolutely responsible. Of course, the Western country NATO will never touch Ukraine in terms of membership of the BARP, although it promises having live border conflicts. Anyway, I just want to say this is hugely depressing and frustrating. The media are absolutely, and obviously except for Spike, a bankrupt and off the chart demagogy.
Okay, thank you. The world in 5 minutes from
and China. I'm watching a lot of Chinese international broadcasting where they're from day one had a very, very balanced and a proper analysis of the historical circumstances which brings to this point. And by the way, of course, there's nothing which could ever, justify, and I'm also condemning this invasion, by the way, of course.
Okay, right. Okay, so on that note, so Phil, there's way too much on the table for you to cover, so just pick out the highlights, whatever.
Well, thanks, Patrick, for that, but I won't comment on those things. I mean, I have sympathies with a lot of what you're saying in terms of the way that the West has been using this conflict for its own, seen this as a possibility for itself to morally rehabilitate itself. I think that relates to Josephine's question right at the beginning of the discussion in terms of Britain's particular intervention. I think, Josephine, you're right to talk about the opportunity which Britain was able, or which Johnson was able to take from being independent of the European Union to be able to strike its own stance on this, play upon its historical military strength, and fortunately for it, it had a lot of these anti-tank missiles in stock so that it could pass those over. I would imagine what Britain is seeing is a possibility, not so much of expressing how global Britain will work out, but an opportunity to try to align itself with its old partner America and see that it can be a helpful lieutenant to the United States, and to the extent to which it can do that allows Britain to continue to do its sort of punching above its weight situation. It doesn't obviously resolve any of the problems, and I'd be if the war is to go on for a long time, I think we'll find that those stocks of British munitions will very soon run out, because if you recall, we've already got one of the smallest armies. I don't know, James will probably be able to tell me, smallest army since beginning of the 19th century or something. Its abilities to actually turn its militaristic posturing, which I'm sure would be a term Patrick might use, into reality, is sorely materially diminished. But anyway, leave that to one side. I think just on the domestic side as well, or perhaps tricking on from that, as to that discussion about the zombie companies and so on, I do think that this, I do think what Hillary said on this, that that could be one of the byproducts. Hillary said in the chat that it could be that interest rates are going to rise further and faster than had been anticipated. I think that's another one of those situations where we moved into a different context, a different framework. I do think, me and others have been banging on for some time about the dilemma that central banks are in, that they've created this mess for themselves of a what I call a debt trap, that you have created a world which is or Western economies which are floating on debt, which at one level would seem to then contain their ability, or restrict their ability rather, to be able to increase interest rates. But they're now in this situation that with inflation going to be higher and maybe faster growing than people had thought, or at least certainly more durable than had been anticipated, they're being pressured to make those steps to increase interest rates. I mean, the measures which have been talked about so far are still pretty low when we're talking about 2 to 3%. But if you consider zombie companies that have been paying, perhaps, something in the region of 3-4% or something, if they manage to work out a good loan deal, and that going up to 6 or 7% whenever interest rates rise, that can be a considerable problem. So I think the people who are indicating in the discussion that this can aggravate not just geopolitical tensions, but also aggravate the challenges that governments have at home. British government, as much as any, I think that's an appropriate way of looking at it. I'll just stand. I mean, thank you so much. So many really interesting comments, and although I haven't answered them all, like central bank digital currencies, for example, I look forward to listening to the discussion again, because I think there's a lot of things that I can pick up from on this in terms of avenues for thinking. But just on the China side, I mean, I think I think China, on Austin's points, I think that my general take at the moment, despite being as critical as anyone else in this discussion of the domestic political circumstances being outrageous in China and condemning those, I think its economic strategy is still working fairly well. I think it has done things which other Western governments have recoiled from doing. I mean, if you consider what it's done on the property, the real estate crisis, it has made an attempt to try to rein that in, rather than it leading to some major implosion. I think in relation to one take I have in relation to its control from the center on the social media companies there, partly I think is linked to their more single-minded focus on developing the industries of the future, the 5G, the AI, the quantum computing and stuff. I think they thought a little bit too much of their resources was going into a bit flaky stuff of social media and e-commerce and so on. And I think they are wanting to focus their scientific, technical expertise and so on the areas which are really going to make a difference in the future. And I think while it's very difficult from the outside, but from people I read who I respect or I think have got a good track record, it does really seem that China is powering ahead on those industries of the future and are on a par with, if not ahead, of the United States. And that is something which I think is going to provide a material underpinning to what I was talking about in terms of the geopolitical bifurcation, which could be accelerated by this. I think one thing just to say to look out for to end with is that tension between politics and economics as it affects, say, the American government and American businesses in relation to China, because a large number of important American businesses rely enormously, and European businesses, I should add, rely enormously on the Chinese market and on Chinese production. I think it was Patrick who made the point about, a lot of Western companies pulled out of Russia, and it was a striking phenomenon that there was so much of this, what they call self-sanctioning, that Western companies were doing a lot more than their governments were asking in terms of pulling out of Russia, an expression of what people have correctly dubbed not so much corporate social responsibility as corporate political responsibility, which is an expression of that sort of whole politicization of business that we've seen in recent years. But I think pulling out of China is a very, very different situation to pulling out of Russia. And if you think of a company like Volkswagen, I was reading, 1/2 of its global profits come out of its Chinese operations. It's phenomenal. If you look at Apple, if you look at Tesla, if you look at big financial institutions, BlackRock. I was talking about Larry Fink talking about the end of globalization. Very interesting in his letter about to shareholders from BlackRock. Big long letter. China does not get a mention at all because BlackRock is quite big in China. It sees that as part of its future. Similarly, Goldman Sachs, Morgan Stanley, so all the big names, the money is still within China and sees that as the future. And yet, if the presentation of the world's new order as being between democracy and autocracy is what firms up through the aftermath of this war, then that's going to put that relationship of businesses allying with the enemy, allying with the evil empire, allying with the evil autocracy under a lot of strain. So that's, I think, one thing that we should be looking out for, just how American business and the American government who have this symbiotic relationship, are going to be able to negotiate that. It's going to be a difficult one. As far as what China should be doing, I think Austin's right. They should sit back and see how this works out, because they're relatively in a strong position at the moment, and they've got no reason to rock the boat over this. They should, look after, which they're doing better than others, look after their own national self-interest, which they seem to be doing. Anyway, thank you again for all the comments, and I will follow them up. Thank you.
Thank you, Phil. And now it's time for the always unsatisfactory Zoom round of applause for our speaker. So thank you very much, Phil.